All right, welcome to Money Never Sleeps. This is a show where we talk about anything and everything that impacts the flow of money from around the corner to around the world. And I want to thank you for joining me today. A lot of things going on over the past few days. One thing I want to touch on is the AT&T deal. What they're doing, they're taking their WarnerMedia, they're merging it with Discovery Networks, and boom. Okay, it's a masterpiece with what they're doing because AT&T is really not in that game and they haven't been big players in that game. You have the Netflix, you have the Prime, you have Hulu, you have, other platforms that are doing the live streaming. They dominate. AT&T, they're really not, they weren't really good at that. So what they did, they got really, really smart, and they made a great deal. And they brought somebody in that's proven time and time and time again to make things work in the media space. And now it's going to be game on. Okay, and the people that win, the investors that win, are the ones that are invested in AT&T. The reason being is because AT&T is going to own somewhere in the vicinity of about 70% of that public company. So the investors are going to own that. So you have a win. You have AT&T, and T, and you have the new entity, whatever it's going to be called. And I think that with the leadership at the helm, within that new entity that will be a publicly traded company, a lot of changes are going to happen. I think Netflix is going to take a hit. You got other streaming services that are like Disney and everything. They're going to wind up taking a hit too because now the game changes a little bit. Now you have all this content from WarnerMedia that's God knows how long it's been. Okay, all this content coming under one roof with Discovery and all these original channels and everything. With I mean, it's just crazy the amount of content they're going to have, and they're going to create more stuff and more stuff. So there's going to be a big value there, I believe. But again, to me, AT&T is going to be the play. I heard today they were talking about, well, Jim Cramer was talking about the dividend with AT&T is, there's not going to be any dividend. They're going to cut the dividend. You have to dump it. The reality is, well, those weren't his words, but the reality is that if you're in AT&T for the dividend, AT&T is not what it used to be. It's not what it was 50 years ago, 40 years ago, 20 years ago. It's a new company, new things. They're trying to be innovative, and they're bringing that to the party. So that's what you're investing in, not the dividend. If you're in the dividend game, buy a bond. If you're in the growth game, take a look at what's going on here. All right, I want to touch on digital assets. I've been speaking about it for many weeks, many months, many years. Digital assets, even though it wasn't a few years ago, wasn't adopted the way it's being adopted now, wasn't mainstream the way it is right now, wasn't out there that people understood it the way they do now. And no matter what's happening right now, the utility of the digital asset is important. I'm not just talking about cryptocurrency, I'm talking about just digital assets as a whole, is the utility of it all. Okay, if you're talking about cryptocurrency, buying and investing in a cryptocurrency, you're investing in a coin. What else is there? Okay, and I said it time and time again, Bitcoin is not going to replace fiat currency. It's going to be a store of value. It's going to be similar to what you invest in gold and that type of thing. That's what you're going to have there. Okay, beyond that, unless some really smart people come together and they start building on top of it, even then, it's just foregone as far as where it's at. Ethereum, different. It's a platform. It brings together a lot of different things. And the growth potential, I said it before, I'm saying it again, the growth potential with it is far greater than Bitcoin. That I'll tell you. There's a utility there. You have this Dogecoin. That's been a joke, and people invest in it. Whatever, goes up, it goes down. It's trading. To me, why the SEC hasn't come in and did anything about that. floors me. You look. I mean, not so much to talk about the trading part of it, but when you have Bitcoin go up because a certain big player gets involved, and then they're promoting it on social media, promoting it, promoting it, promoting it, and then all of a sudden they start not promoting it, or they start saying something different that they may or may not be out of it. Okay, and it's like playing a game, but meanwhile investors are popping in and out over that. So you're kind of inducing buying and selling. And to me, that's something that's that's something that should be looked at. That's all I'm saying. Something that should be looked at is just funny business. But now going back to the digital assets, okay, the utility of it all right. If you have a platform and they're utilizing, say they have a cryptocurrency, but they have other things going on like Ethereum. They have NFTs that go on their backbone. They have other cryptos that are issued, that are minted and everything, off their system. So there's a big utility there, and I think that is just going to scale up if they start building other things, and the possibilities there. Now at right now with what Bitcoin is at, with what Ethereum is at, the bottom line is, Ethereum should be valued along the lines, well, not probably not as much as Bitcoin, but along the lines of that. And I think that it's going to happen. It's going to happen at some point when people see the value. Again, Bitcoin's a store of value. I look at it differently than Ethereum. You can't look at them like they're the same thing, because they're not. Bitcoin is like, all right, you invest in it, you hope it grows because there's a limited supply, and it's the use is global, and so on and so forth. So people use it as that, you know, and it's the leading force within the crypto space. So it'll always be there. It's not going anywhere. It's not going to go anywhere. It'll be more of a store of value. That's what I see it being. And there are other crypto assets out there that have more value than others. You have a lot that have no value, but meanwhile they trade. They're valued in the billions. And you see other comedy coins coming out. I'm going to call them comedy coins. Okay, they're coming out. They're being issued, and they serve no purpose. I don't know what they're trying to replace or anything. There's nothing there. Okay, if you don't, if it's not set in a platform that is scalable and is part of something else, or something that can grow, I don't see the value in it. I don't see the value in it. And I'm going to go into, and I was going to do it last week. I'm going to do it this week. I'm going to go into some things that are going to be interesting as far as platforms and the scalability and the utility of it all. I'm going to go through that because I think it's important. Okay, but going back to AT&T, that deal, genius with what they're doing with WarnerMedia and Discovery, because I think that the value add for the AT&T shareholders is going to be it's going to be pretty great. Because if you look at the growth of Netflix and what has happened, even pre-pandemic, and what's going to happen post-pandemic, Disney Plus, the cord cutters are out there. A lot of things are going to happen. Content, content, content. That is the key of it all. Content. All right. Anyway, I want to thank you for tuning in, and I'll be back with you with the next segment of Money Never Sleeps. And again, I'm going to speak about the utility of crypto assets. I'm going to talk about other digital assets that may be on the horizon, and it's going to be interesting. We're going to have an interesting rest of the year, that I do believe. All right. Thank you, and you guys have a great trading day.